Gentlemen, thank you for joining us for the last panel. We have around 45 minutes to come into land. We need a few questions, otherwise I'll walk to each table. Each table is required to deliver a question. Is that fair? Yeah. One question per table, last session. It's going to happen. Good. Gentlemen, could you introduce yourself, your day job, and how you fit into the private equity ecosystem in Africa? Ryan.
Hi, so my name is Ryan van der Korwijk. I am the product head or product champion for cyber insurance at I2. I2 is effectively a division of Hollard that looks after specialist liability business. And I guess we are kind of where we fit into the ecosystem is really providing that insurance and safety net and level of comfort when it comes to looking at cyber risks associated to companies that are potentially being invested into, etc.
Okay, so cyber risks, insurance, and what is your footprint, your geographic footprint?
So we trade pretty much everywhere where Hollard trades.
Okay.
So we leverage onto their network. Hollard has offices obviously extensively in South Africa,
Okay.
but also then in, and I'm going to try and rack my brain, Namibia, Botswana, Ghana, Mozambique. I'm missing one or two. Namibia,
Mauritius?
we do trade in Mauritius, but don't have an official operation and office in Mauritius as such.
Okay, it's stealth. We shouldn't have said that. Okay, don't tweet that. Nothing in Mauritius. Please, Kirk.
So good afternoon, everybody. I'm Kirk Varaden from Chartered Brokers. We are based in Mauritius. So we've been talking about Mauritius a lot today. So maybe I would like to bring some information to you about Mauritius. First, to reply to Graham. He mentioned about the train. So it will be up and running very soon.
Excellent.
It's already under testing and scheduled to be on in the course of November.
Did they check if it can go through the tunnel? You know about the story in South Africa, right?
And then second piece of news is that we will be having general elections in Mauritius in 2 weeks' time. But generally, it goes very smoothly in Mauritius. Even if there's a transition, change in government, the transition is very smooth. No major changes in policies, so we don't expect anything major to happen. So basically, about Chartered Brokers, we are generalist broker, specializing in three main lines. First, the normal commercial insurances that we do domestically, and then employee benefits, health and pensions for corporates. And what concerns us mainly today is our financial line, where we provide advice and cover to the financial sector, both domestically and internationally, talking about PI cover, DNO cover, crime, financial insurances like PRI, trade credit insurance. These are the type of covers that we offer to, as I'm saying, financial institutions, investors, equity funds, where we work mainly with management companies in Mauritius and banks, other financial institutions. So
thank you.
That's it.
Okay, and so let's flesh that out a bit, Kirk, Ryan. So what is your footprint into private equity, general partners and their funds and their portfolio companies today? Do you have those relationships? Are you starting those relationships? What kind of footprint do you have? Kirk?
Yeah, so we've been working with management companies mainly. As you know, Mauritius is a big offshore sector with a lot of management companies. The big names like Okorion, Sane, IQEQ. So we have relationships with all these management companies where we provide insurance cover to their clients. We've been doing this for many years now.
Okay. And is that mainly PEI or is that employee benefits suite? Or is that too hard?
No, we are talking mainly about financial insurances,
I see.
PI,
Yes, yes.
DNO.
Okay.
Yes.
Okay, good. Right?
So as I2, we provide a lot of those financial lines. So as the actual insurer itself, so we do the commercial crime, the PI, the triple B policies, etc. So we do across the different lines have a whole lot of those sorts of relationships and stuff, and provide the coverages into those sorts of clients, and then kind of filtering down from there.
Okay. I don't exactly know what an incident response plan is, but I do have 2 young children, so I could describe what mine is. Could you describe what yours are and what your insurance products do around those for companies and funds?
Sorry, I didn't get your question.
An incident response plan. What are some of the important things to bear in mind when you're putting an incident response plan together?
Look, it's about the exposure. You see, so what we do is that we evaluate the exposure of the client, and we bring this to underwriters to have codes, terms for the client.
Okay.
You see, so what we do is first understand the client's requirements, the risks that are involved, and then find terms with different markets. So we work with a number of different markets. Worth saying that within our team is a gentleman from the US who has extensive experience in the New York insurance market, a good networking where we can have access to the New York markets apart from the London market. These are the 2 main insurance market for financial insurances. So we have access to both these markets to provide whatever cover our clients are looking for.
And Ryan?
I think from my side, easiest to address that, looking specifically from the sort of cyber sphere as such. An incident response plan is something which forms quite a big part of a cyber insurance policy. So a part of that coverage includes the response activities, leveraging IT security specialists who would come in following a network security breach or a data security breach to determine exactly what happened, what was the extent of that incident, how do we contain that incident to try and prevent further damages, and then get the business back up and running as quickly as you can without sort of being exposed to any further data compromises or breaches. That plan would also include things like PR and crisis communications to try and minimize or reduce any potential reputational damages, legal guidance on what you need to try and do from a regulatory standpoint, bearing in mind that we are seeing a lot of changes on the data sort of regulatory front. So GDPR, which is out from a European perspective, POPI from a South African perspective, but a lot of other African countries, etc., are already bringing out their own privacy law. Nigeria, for example, which has privacy law in place. It also includes a lot of the mandatory requirements like notifying the affected parties, providing them with remediation services to try and prevent them suffering further damages. I think if we look at a specific client or company themselves, some key elements to consider or bear in mind when putting together an incident response plan is having a dedicated team that you would escalate to so that you don't have a whole bunch of people sort of running around like headless chickens trying to determine what we should do. So have a process with a dedicated team who can make decisions on the fly. Ensure that team encompasses various parts of the organization. So generally you'd want legal or compliance involved. You'd want your chief risk officer. You'd want somebody from the sales and marketing team involved. So if there are any communications that need to go out, they are privy to and aware of those things. You also want HR involved so they can kind of disseminate information down into the organization. And make sure you've got somebody from finance involved. So if there is any purchases or checks that need to be signed off, they have the authority and the ability to do that. I think if you are buying the insurance, it's also important to ensure that you've got those sorts of details at hand so that you can kind of get your insurers and those incident response services on hand and active as soon as you possibly can. Because, you know, with an incident response to a cyber type event, time is of the essence. So the sooner you can kind of start containing and get things under control, the less the damages should ultimately be in the long run.
Right. Kirk, I want you to, if you could reflect for us, what is the easiest type of insurance to provide for your clients, and what type of insurance is the hardest type of insurance to provide?
Look, of course, the simple commercial insurances are easy to do, especially when it comes to domestic risks. The most complex one are what I wanted to talk today is about the political risk, where we talk earlier in Robert's presentation, we talk about risk and risk management. And you will remember the slides that he presented with the various countries and the risks that they represent, the red parts. These are the type of countries where you would like to have insurance cover when it comes to investment in these countries. So the political risk cover is what we recommend to investors, to our clients, to mitigate these risks and to make the investment most often more appealing to investors, to DFIs, to financial institutions. You see, this is where, and the political risk can be very comprehensive. This is a tailor-made cover where you decide, depending on the country, you decide what type of cover you want to buy.
And you said you go to the London or New York insurance markets. Two questions: where is that then reinsured, and what shape or form does that insurance cover take back to the fund or the fund manager? I mean, is it a cash number? What form does the...
Yes. So we need to understand that the PRI market is not a very big market.
I don't get that abbreviation. Could you...
the political risk insurance.
Got it. Okay.
Yeah, it's not a very big market. So we have multilateral providers. I'm sure you are all familiar with MIGA. We have also ATI, which is more appropriate sometimes for Africa, but with limited cover. So what we do, to reply to your question, is that we arrange very often for co-insurance between the different providers and reinsurance also. You see, because you have, apart from the multilateral providers, you have also commercial insurers. Sitting in London at Lloyd's, you have like 40, 50 underwriters at Lloyd's specializing in PRI. And some underwriters on the US market as well, like FCIA. So what we craft the cover depending on the requirement of the client. Sometimes we use only one underwriter depending on the size or where it is larger. Like, for example, ATI, the maximum exposure is 140 million USD. So whenever a cover is required for more than that, then we can arrange for co-insurance with other providers. Or reinsurance also with reinsurance companies.
Let me follow through and then I'll come back to you, Ryan. So one thing that often I've thought about in situations where I'm in Africa and I meet up with mates in private equity, typically it's mates, humans in private equity doing their work, and I think, should these guys really have been on the same plane? Should they have really traveled together? So how do you deal with key person risk? I mean, a lot of these private equity funds are quite small. They rely on relationships built over time and skill sets and experience and all those things. And yet you have these deal teams or the due diligence teams maybe traveling together. Do you go down to that level of investment insurance, or is that not something you touch?
Not necessarily. I think this is quite internal for the companies on their risk management policies to decide how they travel. I think this is a valid point that as a risk management policy that you should avoid having the key persons flying on the same flight, for example.
Or driving the same SUV recklessly as South Africans are known to. Maybe, I don't know. Ryan, from your point of view, when you're shaping that insurance for the cyber risk, how do you price that? And what is the actual benefit that plays out? I mean, are you just cutting checks to cover all those functional areas that you described earlier, or there's other components to what your offering is?
So I think probably the best place to start in answering your question is really just to give a quick overview of what all is included in the insurance cover and stuff, and then we'll bring a bit of context to the rest of the answer. So there is obviously the incident response side of things that we spoke about. That's also assisted with, there's a specific sort of cyber extortion element to that. cyber extortion we really see playing out in three main areas, not just in South Africa or Africa, but globally. The first one being around ransomware, which is quite rampant and has quite a big impact on the operational sort of capabilities of the business. Sometimes it kind of grinds into a halt for a couple of days. The other is where they'll hit a company with a denial of service attack. There's actually one of the big banks in South Africa that got quite a serious sort of threat on that today, saying that they have a few days to take certain actions, otherwise they'll be taken offline for a few days. So maybe watch the news for that over the coming days.
Should be fun.
Yeah, it could be. Apparently the date for that is Monday, so we'll see what happens.
Do they have green in their logo? I just need to know.
They don't.
Okay, carry on.
I won't go into more than that, but
nothing
they
to
don't have
worry
any green
about.
in their
Nothing
logo.
to worry
No.
about. Carry on.
So, and then the third form is where they break in, steal data, and then hold the company to ransom not to release or publish that data, or whatever the case may be. So there's those coverage on the incident response side of things. Then if we look at the additional first-party coverages for a cyber insurance policy, the big ones there are business interruption and increased cost of working. So quite often a lot of your traditional insurance coverages require tangible damages, so a fire or a flood or something along those sorts of lines to trigger, whereas a cyber type event doesn't necessarily do that. There's the fines and penalties, which can also be covered. And I think, it talks a lot to one of the biggest risks, and actually, I'll get to that later on in the discussion. The other element that we see under the cyber insurance policy is then the liability element itself. So if there is data that is compromised from that environment, or that environment is compromised and used to launch attacks against other companies, business partners, etc., the policy extends to cover the defense and settlement of any of those sorts of lawsuits as well. One of the biggest sort of risks we see around cyber insurance and sort of cyber risks itself is really reputational is a big one. So, if you get compromised, this breaks into the media, it can be reputationally very damaging. Same thing if you have data that is compromised and stuff like that, you could see a lot of lawsuits emanating from that, where people now look to institute class action suits, etc., is becoming quite commonplace. What we also see quite a lot of is where guys, you generally have executives who've been kind of shown the door following an incident, in particular if it comes out that the security wasn't particularly well implemented at that company, or if indeed they didn't manage that whole incident response properly and carefully as such. So there's really a couple main core areas that we could consider and look at when we're underwriting a cyber risk. The first one is the resiliency of that business. So if you do have an incident which impacts on your operational capabilities, etc., do you have plans and processes to basically recover and get you back up and running? And what are the typical sort of timeframes around that, and how robust are those plans? We'll also look at the general sort of hygiene and security of that company. Things like some of your general controls, password controls, patching, those sorts of things, as well as are you running third-party sort of security reviews, etc., to get an ongoing test and attestation, really, I suppose, around how good are your controls? Are you keeping up to date with the changes in that landscape? Other things that we'd look at is specifically around the data itself. Do you have proper encryption implemented so that if you do have a laptop that goes missing or someone copying something onto a memory stick which they lose, is that data at least to some degree protected? And then also a lot around things like your general employee practices and stuff. Are you restricting access to really what people need to have access to? Do you have good processes in removing access when people leave, etc.? So there's quite a lot of things we consider in putting together the price. A little bit of a scientific process, but one that keeps on evolving as the risk and the landscape kind of changes around us.
And show me the money. What is the benefit that you pay out? Like, how do you shape that? What does it look like?
Sure. So, as far as the payout goes, it generally covers the damages and the costs would be incurred. So, all the costs for that incident response side. So, the IT specialists and stuff, which are quite expensive. All the costs for the PR and the crisis communication activities, the notifications to those who've been affected, providing credit monitoring and other types of remediation services to them. On the extortion front, we'd look to validate the damages, see if we can recover without paying the ransom. If not, the policies generally actually extend to pick up those ransoms as well. On the business interruption and increased cost of working side, we'll actually pick up that reduction of earnings during that interruption, as well as something which ramps up quite quickly is those increased costs of working. So in the claims that we've dealt with, we often find that the insurers have to bring in service providers, etc., to reconfigure, rebuild things. You have overtime of staff, all of those sorts of costs which ramp up and get picked up. And then on the liability side, you've got the legal costs to go and defend any sort of liability suits that you might have against you, and ultimately the settlement of those thereafter.
Kirk, from your point of view, when you're working with a general partner, they're running fund 1, 2, 3, 4, do you ever help them wholesale your offering to all their portfolio companies? Obviously, you probably assume you like more relationships, not just one, but maybe there's a trade-off where the portfolio manager could offer this. Say they've got 10, say they've got 20 portfolio companies. Yeah. Maybe you could offer them a wholesaling. Does that already happen? I'm new to this, so maybe I'm asking a very silly question.
No, it's not. Actually, it's a good question, because actually in Mauritius we don't have GPs as such. It's mainly the management companies. Okay. And we do have arrangements with a number of these management companies where we provide wholesale, as you just mentioned, a cover to their clients, and where there is sharing of revenues between us. Yes, okay. This is quite.
And Ryan, do you have a similar situation or offering?
We do to a certain degree. So we generally end up having to work through insurance brokers as such. Okay. So I suppose you're trying to build as many relationships as you can, and often what we would do is you put in place programs, etc., for those insurance brokers to try and push down into their client bases and stuff as far and wide as possible. So to a degree, yes, although we do have that requirement that we need to work through the brokers and stuff to actually access the end clients.
Okay. I'd also be curious about, what's next, or what you'd like to do next. So I'd like to ask each of you the open-ended question, which is, if you could roll out your next insurance product or service, but the market's not quite ready, or you've seen it somewhere else, or you've got this great idea, you're looking for the lead client to be your beta test for it. Can you offer us some ideas about where you would like to take your insurance offering next? What service would you like to roll out if you could get there? Is there anything you'd like to share with us today, Kirk?
Look, maybe what we have not talked yet is about trade credit insurance.
Okay.
That I'm sure will interest a number of people around here, where especially when we're talking about cross-border, where we want to have the confidence that the investment is being protected.
Right.
So I think that trade credit insurance can be the answer.
Do you have the geographic coverage to cover is it 28 countries who signed on to the new free trade agreement? Are you able to offer that coverage or no?
Look, it is on a case-to-case basis, not only based on country risk, but also on the client's risk as well. So it is an overall assessment on a case-to-case basis before deciding and applying the terms, the rates. But cover is available nearly in all countries. Yeah.
And how do you price that, if I may ask, that insurance, the trade credit?
Yeah. Sure. Look, as I'm telling you, it's based on the exposure, country risk, client risk, you see, a past history.
Right.
Yes.
Okay.
So it's based mainly on that, the limits that are required. Are we covering the whole portfolio of debts? Or is it a single transaction? So it depends on...
Would it depend on what sector or vertical that you're in? Say it's a mining situation, you're going to price it differently to an agribusiness situation? Or it doesn't matter what the vertical is?
Yes, the industry does not really matter.
Okay.
It mainly the country risk, the client risk, and the past history.
Okay.
you know.
Ryan, any new products you'd love to roll out? Are you going to roll out soon?
Yeah, absolutely. So what's quite fun with the cyber, and I suppose what keeps me kind of on my toes, is that it's a risk. It's constantly evolving and so forth. So there's a number of new things which we've introduced onto the coverage over time. One of the big ones which we're now sort of rolling out is around with the cloud adoption and people kind of, adopting the cloud more, starting to bring in business interruption cover for companies around if their cloud provider gets compromised and is taken offline for a period of time. We're also looking at the physical damage portion of it. So as you have the sort of rise of the Internet of Things and more devices connected to the Internet, it creates a whole new exposure. So, all of a sudden you can potentially hack into a hospital and switch off a life support system, or hack into a building and crash a lift, or hack a mine and drive a dump truck off the side of a cliff, or whatever the case is. So we're starting to explore.
There's quite cheerful examples you offer. Thank
lovely
you, Ryan.
examples. No,
Thank you.
It's great
Good.
bedtime reading.
I'll remind you the stairs are there and then straight down. All right.
Absolutely.
Okay, good.
We can switch the lights off on the stairs, maybe. That could make it interesting for people
It's
walking
more
down.
exciting.
Let's see
It's
where
more
we go.
exciting.
Yeah.
Very good.
So we're looking at the physical elements of that and trying to bring coverage to that, because it's a big exposure that companies can't really buy insurance for at the moment. So it's a big gap in the market that we're exploring, but difficult to quantify. So that's really the challenge on that front. And then there's also, there's the whole sort of risk to the individual as such. So when you start looking at things like theft of funds, cyberbullying and stuff, that's rampant amongst kids as well as adults and stuff. So we've actually, and I know it's not necessarily related to this discussion, but it's an exciting thing that we're playing with now, is we're busy rolling out a personal cyber insurance offering and playing with alternative distribution strategies. So actually embedding those with OEM providers. So for example, cell phone manufacturers and stuff, and actually including that with the rollout of cell phones and stuff. And then I suppose the other one, just jumping back onto the commercial side, is actually the theft of funds. So one of the big things we're seeing on the cyber front is the whole business email compromise side of things, where guys are breaking into companies and then starting to intercept mails and changing bank account details to actually steal funds, etc. So we're seeing cyber start evolving into where it now picks up those first-party financial losses as a result of that.
Now, I know this might be very exciting, and it is the end of the day, so we can be experimental. I know that most insurance people are probably going to sell you more insurance, not less. Insurance is mostly sold, not bought. So, here's an experiment. We can role play it if you don't want to do it in real life. We'll just suspend belief. If you were speaking to an audience like this, and you said, hey guys, you're actually overinsured. You're actually taking on too much insurance in this space for your different specialities, your different roles in the insurance business. What would be your wisdom on saying to my audience here today, guys, when you look at this kind of insurance, or my experience here, or I looked at this client, we did an audit and we found they're way overweight over here, you don't need that. So help them save a few rand here while they think about buying your exciting new widgets that you're going to roll out next. Ryan, can you answer first, and then I'll come to you, Kirk.
It's a simple answer. You can never buy enough insurance.
Right, okay. When's your performance review? Because you should get 5 out of 5.
Next month.
Very
so
good. We'll
just
send it in. Very good.
Yeah, I think, so on a serious note, I think it's important for companies to actually take the time and have a good quality broker who can come in and understand the business and actually try and pinpoint and understand what are the risks and the exposures that you have. Unfortunately, and I'll be brutally honest, insurers probably have made insurance a little bit too complicated over time.
I'm shocked to hear that. Anyone else shocked? The audience looks shocked.
My performance appraisal just dropped from a 5 to about a 3.
Whoa. Yeah.
So, it does get complicated, and you need to be wary of buying coverages which potentially would overlap and stuff. So it's important that you've got a good, knowledgeable broker that understands your business and can start to understand what your insurance portfolio looks like, and make sure that you're not double buying coverages, that you are buying covers that are specifically aligned to your business risks, and that the limits and so forth that you're purchasing are also in line with that. There's little point in buying $100 million of cover for something where at most your exposure could be 20 or 30. So I think there's always scope for a little bit of savings there. Again, I suppose it comes down to having a good broker and understanding the business as well, and to a degree the underlying insurances.
Good. Kirk.
Look, my point here is very simple. When it comes to your own assets, you decide whether you want to transfer the risk to an insurer or you want to self-insure, you take the risk. But when you are handling other people's assets, you see, then I think any wise person will make sure he's properly covered, you see, in terms of his professional risk, in terms of the assets he's handling, you see, that he's, of course, not to be over-insured, but to be adequately covered against all the risks that I just mentioned earlier in terms of political risk, trade credit, etc. I think these are products that are available to mitigate the many risks that are inherent to investment, cross-border investments. So I think that we need to be wise on that side.
I guess I should have declared up front that my first job out of law school was working at Forbes. My client base was 200 SMEs, and I looked at every one of the insurance policies. Which leads me to the question, how small is your smallest font?
How small is my font?
How small is your smallest font, and how long is your contract?
Kirk, you can take the first one.
What's that question?
No further questions, Your Honour. I'll change my line of questioning. Thank you at this time. It was a fair question. I know you've always wanted to know. You have an answer, Ryan. What is the smallest font you use in your contract?
We dropped.
Is it size 8? Say
Yeah,
size
now I
8.
get
Is it
it.
size 6?
Size 10.
Really?
Size 10.
How many pages is your
bold or
contract?
italic. It pushes. It depends on if it's the personal or the commercial line. The commercial policy is probably about 10, 15 pages. Mostly definitions, though, because of the cyber being relatively new in the market and stuff. You kind of
It's
have
all
to
in the
define
cloud.
a lot.
Yeah, with your
It's all in the
policy.
cloud.
Yeah,
All of these
I
sorts
should
of
have known,
things.
but it was in the
Yeah.
cloud. Nice.
It depends on the weather, whether or not.
Nice,
Yeah.
nice.
No,
Kirk, you back?
What
Go.
I can add on that is that as brokers,
Yes.
we read the policies for the
You promise.
client.
The whole document.
Whatever the font is, even if we need to use microscopes,
Yes.
we read it for the clients.
All right, as we build our learning for next year, we're heading towards next year, these gentlemen will be bringing sample contracts. Is that a good way to go? Helene likes it. She's asset consultant. She needs to check these things for her clients. That's a go. Thank you, gentlemen. We'll
Done
bring
deal.
samples for next year. We're happy with that. Excellent.
Perfect.
Right, I've dominated with lots of questions. Do you guys have questions? Anyone? Question at the front. Do we have a microphone? Right. Here comes our wing. Ms. Mapipi, please. Number 11 or 14, I always forget. Which
Thank
is he?
you.
11, yeah. Please.
Yeah, thank you. My name's Habat Ramibazi with AHC International.
Okay.
I think that, yes, we spoke earlier about the Abraj case. I
yes.
think
Okay.
I would like to hear views from the panelists on what could have been done better, or whether actually
Yeah.
Abraj was insured, and if yes, what if, or in the audience, if anyone knows.
It's a
whether
great question. And
there
did
was-
that
there was
spike
some-
underwriting coverage
Exactly.
for PI
And,
and all? Yeah, please. Kirk.
I've not understood the question. Can you say it again?
Yeah, so you know the Abraj case, that this Abraj fund that went under about a year ago, and all the main partners have been sued and convicted. And the question I have is that in light of this conversation we're having on insurance and risk and protecting ourselves, what could have been done better, or if anything was done anyways, could anyone in the any of the panelists or in the audience know what actually transpired, or what insurances were in place, or what lessons we can learn from that?
Yeah, I've not followed this case specifically, but I just hope they had in a good PI and D&O cover.
And what do you think? So let's build on that. So you're an LP, and you're investing into Fund 3 of this GP. How best do you ensure that? What structure do you put around the LP not getting burned? The fund separate as a legal entity, separate from the general partners, where the corruption could have happened at the general partnership level and or the fund level. How would you go about ensuring that? Can you, or how would you do that?
this will be the PI cover from the GP,
Mm-hmm.
the PI and the DNO as well.
Mm.
The combination of these two covers should be enough to cover the risk that you just mentioned.
And would that risk be just capped at the level of the LP's investment, or the other considerations you would bear in mind about risks, reputation risk, some knock-on other effects that would take the number higher than just the cash contribution or available cash to contribute over time? How would you choose the amount of money?
Yeah, no, but insurance will not cover reputational risk, etc. You see, it will
But
be
Ryan
cover
just sold me some now for my cloud.
the pecuniary losses.
Oh, okay.
Yeah.
Okay. Ryan, would you have any response to that situation?
So I'd agree. I think you'd find that the primary sort of insurance policies that you'd want to see in that sort of scenario, and I also haven't followed that case specifically, would be your directors and officers type of cover, possibly a bit of your commercial crime type of cover if there's internal sort of employee misdeeds and things, and then obviously your PI insurance. Just to touch on the reputational side from the cyber perspective, so while the policies don't specifically cover your loss of perceived market value or goodwill and things like that, they're covering the cost to try and minimize that. So all the costs for the PR spin doctors and stuff to ply their trade as such and try and manage the potential reputational damage.
Helene, I'd like to pull you into this conversation. Could we get a mic to Helene? So the question I'd like you to ask, and or if you got a question for them both, is are you invited to provide advice to your clients on how they should think about insurance, how much or how little? Is that part of your consulting or your work?
So no, we normally don't. What we do is we would get insurance consultants involved when we do due diligence on funds to look at these particular sort of things and look at what insurance they have taken out. What I did want to say, which I found interesting, is for Abrage, no insurance has been paid yet.
Yeah, it's still in dispute, right? It's still going through the legal...
And it will be in dispute.
Sorry?
Exactly, yeah. Yeah, so and I mean, so that's not going to get paid off the back of insurance. And similarly, the Abrage managers were not dismissed with cause. And you might think that if there's one case where people need to be dismissed with cause, it would have been this. But so they got dismissed without cause, and there's not been any insurance claim, and there won't, there is some guys making a case, but as the case may be, there's no money paid yet. So, I mean, I think if you need to rely on insurance, that is always the last outcome,
Right.
and it's most probably not where you want to be. But, it is the base that needs to be covered. And it is quite it's quite specialized. So it normally gets outsourced to guys who know exactly how to do it.
Okay.
But the other thing which we do find quite interesting is, so they were talking about commercial insurance and some of those risks. What we found extremely interesting is that a lot of the funds north of the South African border, in insuring some of those risks, because there's very little data available, what happens is pricing those risks is very difficult. An easy example is to take crop insurance, for instance. You need good weather data to do crop insurance.
Right.
So what happens is the insurance is available, but the cost of the insurance is prohibitive. So, which would mean if you had a portfolio of 300 companies, you would self-insure because it doesn't make any sense.
Right.
But now the thing is, you only have a portfolio of 8 companies, and for that particular fund, one company failing will make sure that they don't get the returns they get. And then the question becomes whether, what is the case for that kind of insurance? And,
Right.
Also because it is very expensive, it's a serious drag on return. So there's guys that need to make that sort of...
So wouldn't you zoom out and have the LP do it?
Well, yes or no, but the point is the fund themselves are heavily invested in their particular outcome, not the LP portfolio's outcome, which is understandable.
Okay.
And so LPs do take some insurance around fraud and risk and directors, but it's not aimed at portfolio level risk, which is managed by the managers.
Thank you. Angeli, I'd like you to ask a question. Could you get the mic over? Any response to the comments from Helene?
No, I think she makes very good points about where data is typically a bit scarce on the ground, that you do find that insurers typically would build in a bit of a buffer because they don't have enough insight to underwrite it sufficiently.
Right.
I think we are, in particular, when you look at crop insurance and stuff, seeing some nice developments from sort of weather modeling perspectives, etc. So being part of the Hollard family, there was a purchase, they bought 25% in last year at the Tokyo Marine. And it started to give Hollard some really nice insights into a lot of the weather modeling tools and stuff that a company like Tokyo Marine has and has kind of purchased over the years and stuff. So I like to think it's a picture that is starting to change, but it's again going to be, specific to different insurance lines as such. And the more data insurers have got, the more sort of punchy they can get on pricing.
One would assume some insure-tech startup is trying to chase those gaps, right? Looking to sell their data.
We're seeing all sorts of things cropping up, yeah.
Yeah, good. Anjali, any questions, comments for the insurance panel?
Just commentary, I guess. Going back to the Abraj case, the fact is that a lot of the times insurance, PI insurance and D&O insurance carves out fraud and willful misconduct as well. So in those situations, the GP should be liable, and that can be difficult if the GP doesn't have much funds in the entity that's the contracting entity, yeah. So, I think as part of the due diligence for LPs, they need to check that the GP itself is substantial and has assets in the entity you're contracting with.
And so this would tie to what did we learn from Abraj? How would you set up the insurance structure better where you've had the Abraj case? Have you explored options?
I think it is a difficult one because of the fact that, it's difficult to insure against fraud and willful misconduct. There may well be policies now which are extending that far at a higher premium. I'm not sure if that's something you've seen in the market, but that could be one possible solution. And then I think it's just going back to, LPs being extra diligent and ensuring that they have a substantial entity and, just contracting it that way.
Yeah. Okay, good. Any response to that?
No, just to say that the PI is on the basis of errors and omissions, which is quite large, wide definition that can cover many situations.
Okay. Right, any quick comment?
Just the one. So you do get the crime type policy, so your commercial crime policies and so forth and things, but those are, as you mentioned, generally quite expensive and difficult to get a hold of. So it is a potential option. It's also going to depend where exactly the kind of the theft, etc., within the businesses happened.
I couldn't be moderating an insurance panel without recommending to my audience, those of you who are Netflix viewers or want to watch over my shoulder on my laptop later, there's a movie called The Laundry, and it's excellent. You've seen it, yeah? One of the key story threads is around boats on Lake Erie? No, yeah. And no, Lake George in upstate New York, not far from Vermont. And it goes over, then they go looking for the money, turns out it was reinsured. Well, it's a bit of a kind of comedy, tragedy, comedy, what have you. But well, maybe if you're in the insurance industry, you shouldn't watch it. Maybe don't watch it alone, all right? Have someone to hug, okay, if you're watching that, but it's a classic story. So if there are no other questions, I'm going to ask the panelists to close. Before you give me 60 seconds, last thought to wrap up, I want to pitch you on one idea. This ties back to a previous life. I think every private equity portfolio company active in Africa, understanding the culture, and the means or lack of means, should have a funeral policy for all their workers, which is a very meager, fairly cheap, but meaningful in the culture. And this is informed partly from spending the winter in Matuba, where on the main street, there's about 5 funeral parlors. And I know the prices of those funerals aren't cheap, and I know those workers would probably value that output. So how about it? Why doesn't every portfolio company have at just the minimum a decent funeral policy?
It's a great question.
Good. Next year we'll pick it up. Yes?
No,
Kirk?
you're right, they should do it.
Kirk?
Look, I must admit, funeral policies is not a big thing in Mauritius.
I understand it's not big. But
Yes.
the social benefit of that is significant.
I think throughout Africa, I mean, even if you look at
absolutely.
just here
Everywhere.
in South Africa and
Yeah,
things
yeah.
like that, culturally,
Yes.
having a good funeral and stuff is a very big thing. So
Sure.
it would be a fantastic employee benefit to start including.
Yeah, good. Here ends our product development session, which didn't go as well as I thought. Next time I'm bringing a whiteboard. Right, I've asked my panelists to wrap up in 60 seconds, then I'm going to land our event, and then Anna's going to say farewell, then you're going to take a break, then you're going to have drinks, then you're going to have a gala event where you are much better looking in your finery. Yeah? That's what's going to happen next. Here goes 60 seconds from Ryan, 60 seconds from Kirk. Gentlemen.
Great. I think it's important as part of the due diligence process to really try and understand what does the security controls and infrastructure of a company look like, especially if you're looking to invest into that. There have been some horror stories over time where there have been investments into businesses only to then find out that those were actually compromised in the past, and that severely impacts on the value of those. It's incredibly important to consider that where there's going to be any level of integration into any other companies, because you're effectively taking on any nasties that they may have in their environments. Reputational damage is an incredibly difficult thing to come back from, so it takes a really long time to build a reputation, not a lot of time to destroy one. So cyber is something, and data privacy and things is something which is very much under the spotlight, and there's a lot of focus on those sorts of things nowadays. So it's something which should be taken very seriously, and a cyber insurance policy really kind of helps to back that. So, if you did by some chance miss something, and it does happen, at least you've got that safety net to fall back on and cover the cost for those to investigate, understand what happened, manage, try and reduce the PR side of things. And if there are any operational impacts to those businesses, at least you've got a bit of insurance cover and stuff to mitigate and, well, hopefully mitigate to a full degree, but at least soften the blow from that.
Excellent. Thank you, Ryan, and good luck with your performance review. Thank you. Okay. Kirk.
Yes, no, as I mentioned, I think we should not underestimate the importance of insurance, especially when we're talking about other people's money, to cover our liability, to cover the risk associated with the investments, especially when concerns cross-border investments in some high-risk countries, the political risks involved. So I think these are the things that, this is the message that I'm passing today, is that these are the things that we can do and to mitigate risk, and I will be happy to engage with you individually for advice, for whatever cover that you need.
Excellent. And thank you for the news about the rail. I appreciate that. All right, please join me in thanking our panelists.